Every year during Diwali, the festival of lights in India, families flock to jewelry stores to buy gold, believing it brings prosperity and good fortune. It's a tradition rooted in culture. Gold is seen more than just wealth, it's seen as a symbol of security and status, often valued even above diamonds for its timeless appeal. But right now, in October 2025, gold's making headlines for a different reason. It's soared to a staggering $4,300 per ounce, up over 70% this year alone. Some warn it's a bubble ready to pop, while others say it's just the start of a massive climb. Hey everyone, welcome back to the channel. Today we're diving into the big topic, is gold in a bubble? We'll explore why gold's price has exploded, who's driving this surge, the lessons we can learn from history, China's huge role, and how US government spending ties in. At the end, I'll share my take on whether gold's in a bubble or headed even higher. This video is packed with insights, so let's get into it. So, why is gold soaring? Well, it's a perfect storm of reasons. At the start of 2025, gold was around $2,500 per ounce. Now, at the time of recording this video, it's at $4,300, a 72% jump in under 10 months. To put that in perspective, if you invested $10,000 in gold at the start of the year, it would be worth over $17,200 today. But why has it surged so much? Well, first, global unrest is a huge factor. Conflicts in the Middle East, the ongoing situation in Ukraine, and the trade tensions between US and China are making investors nervous. And when the world feels unstable, gold's the classic safe haven, like a financial fortress. Then there's inflation creeping back in. After a brief cool down, inflation is ticking up again globally, eroding the purchasing power of fiat money. Plus, the stock market is volatile. There's talk of a potential bubble in tech stocks, especially those tied to AI. If that bursts, investors want a safe spot for their cash and gold's a top pick. Also, the US dollar is weakening. When the dollar loses value, gold gets cheaper for buyers in other countries, boosting demand from places like Asia and Europe. These forces are all pushing gold prices through the roof. But who is buying all this gold? Well, the big players here are central banks around the world, and they are buying like never before. In 2025 alone, central banks have added hundreds of tons to their reserves. Based on the latest data from the World Gold Council, they net purchased 19 tons just in August. This is part of a trend where over 1,000 tons have been added globally in recent years. China is leading the way, piling up over 2,200 tons after 18 straight months of buying. They're doing this to rely less on the US dollar and protect against things like sanctions. Russia, Turkey, and India are also in the game. India now holds about 800 tons, with their central bank's gold pile topping $100 billion in value with these high prices. Investors are joining in as well, pouring cash into gold ETFs. But the central banks are the real power, doubling their buying since the Russia-Ukraine conflict started and shifting from US treasuries to gold for the first time since 1996. Has this happened before? You bet it has. And history offers clues. In the late 1970s, gold shot from $100 to $800 per ounce during the oil crisis, high inflation, and global chaos, an 800% rise. But when Federal Reserve raised the interest rates to fight inflation, gold crashed over 50% in the early 1980s. After 9/11, gold climbed from $250 to $1,900 by 2011, driven by wars, the financial crisis, and money printing. And it dipped when economies stabilized. Today's surge feels similar, but it's backed by real physical buying, not just hype. So how do we determine gold's fair value? Well, valuing gold is tricky since it doesn't produce earnings reports like a company. One way to check is inflation-adjusted pricing. In 1980, gold's peak was about $2,800 in today's dollar. At $4,300, we're now past that, but it's driven by geopolitical risks and an unprecedented central bank demand, amplifying the momentum. Another way is the money supply. The US M2 money supply, which includes cash, checking, and savings, is at $22 trillion as of August 2025, up 44% since 2020. Meanwhile, gold's price has jumped 177% in that time. That gap suggests gold might be a bit overheated, but if these drivers persist, it could keep rising before any correction. And well, the US debt is a big piece of the puzzle. Interest payments on the government's huge debt are set to hit $1 trillion a year, soon eating up the budget. To cover this, the government might borrow more or print more money, further weakening the dollar and making gold a great hedge. Lastly, there's also arbitrage action heating things up. On China's Shanghai Gold Exchange, gold often trades at a $50 plus premium per ounce compared to Western markets like COMEX. Shanghai deals in physical gold that must be delivered, reflecting real shortages, while COMEX is mostly paper trading. In 2025, over 36 tons of gold has flowed into Shanghai for these trades, pulling global prices up as Asian demand outpaces Western supply. Now let's talk about the big question. Can it continue to rise? I think it can, even after a 5.3% drop on October 21st, the biggest one-day fall since 2013. Geopolitical risks aren't fading, US deficits are growing, and central banks are still buying. But if inflation cools, or interest rates spike, or global tensions ease, then we could see a 10 to 20% correction in the short term. So, is gold in a bubble? Well, I don't think it's a classic bubble yet. The demand is real. Central banks and investors are buying actual gold, not just paper bets. Gold could hit new highs, but expect some volatility as well, as there will be profit taking. Thanks for watching this deep dive. What do you think? Drop your thoughts in the comments, like the video if it helped, and subscribe for more investing insights. And I'll see you in the next one.